So in February, the Him and Hers app was downloaded a significant amount to the tune of an increase in 47% in the month of February. And that was primarily due to the GLP-1 drugs. However, in recent weeks, the FDA said that these drugs are no longer in a deficit, and that's why price tanked from a high of $72 and nearly was cut in half in the span of less than 8 weeks. Now, with that drop in price has taken out this daily buy level. I was anticipating a bounce higher, but the momentum to the downside was just too great for the buyers to push price up. And now what we find is price hovering at a key level that happened to be, once upon a time, all-time highs, which served as resistance in the past and now is somewhat support. Now, before we continue with the analysis, let's get into the actual news. So Him and Hers stock was up a little bit this past Monday after Morgan Stanley analyst Craig Hedenbach delivered some good news for the mail order drugs stock. Citing third-party data, Hedenbach said downloads of the Him and Hers app increased 47% year over year in February. Now, on Apple's App Store, Him and Hers offer two separate apps for download: Hims, which advertises itself as an app for hair loss, sexual health, and Hers, which promotes hair care, mental health. Morgan Stanley research suggests the majority of the downloads in February were for the Hers app. Now, this suggests new customers' growth for Him and Hers is coming primarily from women. It also likely the surge in downloads in February in particular was driven by advertising surrounding a certain sporting event that took place that month. And seeing as those commercials concerned weight loss, demand for Hers app likely indicates increased demand for women's for the GLP-1 drugs Him and Hers hawks as cheaper alternatives to those from Novo Nordisk and Eli Lilly. But here's the problem. FDA is increasingly ruling that there's no longer a deficit for these drugs from their patent-owning manufacturers, which probably means Him and Hers will soon not be able to sell these drugs anymore. Now, in a note, Hedenbach maintained his $60 price target for the stock, but declined to upgrade the stock to a buy, maintaining the equal weight rating. Him and Hers stock cost 62 times earnings today. If it rises to $60, this would be and lift its P past 100. Crazy, crazy stuff. This means expensive and perhaps unlikely to happen. All right, so you got two things going against the stock. You have the fundamentals that says that the GLP-1 drugs are no longer in a deficit, and you have the technicals saying that stock, if it was to rise, would be selling at a very high valuation. So the charts and fundamentals suggest price could further decline. The charts are suggesting now price is now trading below this key level. We really need to see how price closes for the week. You get a candle close below this $35 level. That opens the room for further decline to the next level where I anticipate buyers stepping in. However, going back to the daily chart, let's see if we can find the candle in control at the moment. So at the moment, there is no candle in control. Candle control is when a candle engulfs subsequent candles. So as an example, this red candle was the candle in control and so price closed above it. So we need to see over the next couple of days what price action does. But for my money, I'm looking for more downside risk. I'm looking for your next level to come in at the $25 resistance, now support band. And for shiggles and grits, this is where the 200-day moving average sits, which will serve as dynamic support. Thanks for watching. Subscribe. Please like the video.